Okay. All right. So it is about five after. Thank you everyone for joining us today on time. Again, for our AgLanta Grown and East Point Grown collaborative effort for our agribusiness training webinar series. As you all know, this is a 7-part series where we're operating in 7 consecutive Monday evenings, uh, offering different training in a lot of different areas within agribusiness. Today, we're focusing primarily on tax preparation, which is this is the season. So hopefully, we'll all be taking good notes, and we'll have this to prepare for our taxes and tax seasons in the years to come. So definitely want to take the time to shout out our team. Again, this is a collaborative effort between AgLanta and the AgLanta Grown team. On behalf of AgLanta, I am Justin Nicholson, the AgLanta Grown Program Coordinator. As well, Yesenia Maldonado is on the line doing some back-end support, monitoring the chats and getting polls and surveys administered. So we thank you so much for your efforts, Yesenia. And I'll pass it over to Tanisio Cianima for introduction.
Yes, greetings everyone. Thank you, Justin. My name is Tanisio Sanima. I'm the Urban Agriculture Manager with the City of East Point via our East Point Grown program. So thank you for all you East Point stakeholders who have shown up tonight. Definitely hoping to give you all a very good set of information, not only tonight, but for the remainder of the webinar series. So thank you for having me, and I'll go ahead and pass it off to the Good Agriculture team.
Hi, everyone. It's great to meet you. I'm Alex from Good Agriculture. We are a business that supports farmers with the quote unquote indoor activities. So things like bookkeeping, managing your finances, marketing, and also taxes, which is what we're going to talk about tonight. And I will hand it over to our CPA partner, Sam.
Good evening, y'all. This is Sam Quarles over here in Texas. We are basically an ag CPA over here in Texas. We service everybody pretty much in the agricultural space. And yes, if y'all have any questions, please let me know. And I will now hand it off to Kirsten.
All right, and I'm Kirsten Simmons. I'm also with Good Agriculture and with Ecosystem Farm. So I'm the Chief Farming Officer, as I call myself, and I'm the one who makes sure that anything we do is actually useful for farmers.
All right, and we definitely appreciate Good Agriculture's expansive knowledge on front end and back end on farm support. And yeah, this is a great partnership and collaboration, and hoping that you all will see it as beneficial and continue to reach out to Good Agriculture for any technical assistance that you may desire. So moving into our grounding and acknowledgement, AgLanta generally likes to start our meetings with the grounding and acknowledgement of the land, the territories, the practices and cultures of the indigenous peoples, forcibly removed First Nations here in our territories, the Muskogee Creek people, the enslaved people of African diaspora, who were who were horrifically and unjustly brought here in the soils to develop our economy, and the countless migrants and immigrants who largely are a result of our laborers in the agricultural food system. We also want to uplift all peoples of the global majority, aka Black, Indigenous, and other peoples of color, also known as BIPOC, as well as other individuals, groups, populations, and cultures that continue to show up for the anti-racist communities and practices for the benefit of all people in Atlanta and beyond. And also, we're going to show respect, gratitude, and support to all humankind and living beings in the intersecting and overlapping social identities and factors such as gender identity, caste, sexual orientation, race, class, religion, disability, physical appearance, and height. And that grounding and acknowledgement was written by our Urban Ag Director, Jay Olubayewu, And I think we'd be remiss if we did not mention a quote by Reverend Dr. Martin Luther King Jr. No one is free until we are all free. Thank you. And with that being said, I think we can kick off tonight's webinar on tax preparation. And I'll swing it over to the Good Agriculture team.
All right, thank you for sharing, Justin. So just a few ground rules for tonight. So this is a little bit of a smaller crowd, so please feel free to just, interrupt at any point. Feel free to come off mute or put questions in the chat, whichever you're more comfortable with. This is going to be a lot more useful to you if you ask specific questions. Don't be afraid to ask a question specific to your farm or give examples related to your farm. And we know that this is, especially when we get to taxes, like taxes are challenging for everybody here except for maybe Sam. So there's really no such thing as a dumb question. So, we're trying to get lots of participation, make this as engaging as possible. All right. So we're gonna start with a quick icebreaker, just to test, the muting and unmuting in the chat. So what is one thing you would rather do than your taxes? And I will not be afraid to cold call on this call, but I'm gonna be nice the first time. So Kirsten, you want to share one thing you'd rather do than your taxes?
I mean, pay my accountant, given the state of some of my finances, upwards of $1,000 to manage them.
So you can do the important stuff like, cleaning out the rabbit pen and transplanting strawberries for 12 hours at a time. And
yeah.
I would rather work in the soil with my champion youth gardeners and letting them make the difference in touching other hands and lives and giving love in the garden, because it all starts with a seed.
I love that. Also, for folks who are new to Zoom, if you go to either the top or the bottom of your screen where there's 3 dots that say more, you can see something called reactions. And there are some emojis that you can use to react to anything we're saying. So I just gave Charlie a heart because that was a beautiful answer. You can also raise your hands there if you have questions and don't want to interrupt. Good answer, Tunisia. Anyone else want to share?
I'm new at this. I don't see the dots, so bear with me. I'll be better on the next through the session, but today I'm on a test drive.
Love it.
I don't see the dots. Let's see.
We got Amina. I'd rather be hanging out by the beach or the ocean. Also a good answer.
Yeah, I'll take that one.
All right. So what we're going to cover today, so we already covered introductions. We will spend a lot of our time on federal income taxes because that's the particularly complicated things, but we will also spend a good chunk of time on state income taxes. Now, because this is a session with the city of Atlanta, the section around state income taxes, local sales taxes, property taxes will be focused on Georgia. But if you are out of state and have questions, feel free to ask them anyways. We may be able to answer, but if it's something state specific that's not Georgia, we may not have all the specific information. And then of course, we will share some additional resources at the end to help you do your taxes. So we laid out some potential goals for the session as far as staying compliant with your taxes, taking advantage of all the tax benefits you're eligible for, saving time. And so would love to hear from you guys either on voice or in the chat. What were you trying to get out of this session? Was it one of these 3 or was it something else? And if so, what was that something else? Jenny, would love to hear from you. What were you hoping to get out of this session?
I would say 1 and 2.
1 and 2. Awesome.
Yeah.
We got 2 and 3 from Amina. Anyone else? Also overall education. Yeah, taxes are complicated. All right, so we're gonna do our first poll. Yesenia, do you mind pulling the poll up? And Hillary also said, suggesting an accounting system to track expenses year round. We will cover that at the end. And we'll cover it a little bit as we go through.
Looks like our poll question is actually off. It ought to be, how much time did you spend on your taxes last year? 50 plus hours, 40 to 60, or 40 to 50, 20 to 30, less than 20. I didn't pay taxes at all.
And the last answer, just given that we're on a city call, I didn't pay taxes last year, except obviously I paid anything I owed the city of Atlanta and the city of East Point, because we have people from the city here. But we first off, all these polls are fully anonymous, so feel free to just answer truthfully. And then we are not tax enforcers on this call, so even if we knew who this one person was who didn't pay taxes last year, like we're not going to come after you.
Yeah. And Hillary, you're suggesting an accounting system to track expenses year round. I would swing back and watch last week's webinar, because we definitely dug into that in the general financial management webinar.
Yeah, so good news with the poll, no one spent more than 50 hours last year paying taxes. That's great, but several people did spend a significant chunk of time. So hopefully we can reduce that a little bit this year. All right. So jumping back into the content, why are taxes important? So some of these things may be obvious. So, in the top left corner, like they are legally required. And if you don't do them, you can get fined. If you really, really, really avoid your taxes, you can end up in jail. But even on a lower level, paying your taxes is required for participation in some farm programs. So that's one thing that's important. But on the plus side, the tax system can also help support your family, especially in years where your farm is taking a loss. So if, you get hit by, a crazy winter storm or something else bad happens on your farm, and maybe you have a spouse who's working a W-2 job, your farm's loss can kind of go against the family income and help get you guys a tax refund, which can be really helpful. And then third, it just helps you to be able to understand these things, to know how taxes fit into your farm budget. And so that way you can be a better farm business planner and avoid things like making an investment that's profitable pre-tax, but then once you take taxes into account, like the investment's not actually worth it. So those are just a few reasons why taxes are important. And Kirsten, I think you wanted to share some perspective here.
Yeah, and I mean, this is just coming from, I am now, as of December 2nd, completely caught up on my taxes. I spent 7 years delinquent on taxes. And that was cycling through, I was completely in payment plans, defaulting on payment plans. I refused to pay anything during the Trump administration period. And then, getting back on track. It does. The IRS is not a horrible organization to be in debt to, but they're a very persistent organization to be in debt to. So it's not the end of the world if you can't pay the taxes, but it's also, as Alex said, something where, for EQIP, they check to see if you are in debt to any federal or state, for any federal or state taxes. So it's just kind of, it's there.
And before we jump into the taxes, one question we get pretty often is like, what should the legal entity of my farm be? And what we want to start with is you should have some legal business entity for your farm, whether it's an LLC, an S Corp, a C Corp, something else. But this helps to protect your personal assets. So for example, like someone gets sick eating your produce and sues you, or you are hosting a farm tour and like someone gets hurt on the farm and tries to sue you. That means they can only go after the farm's assets and not your personal assets. And these are both very simple to start. It's basically like a short form and like $100 on the Secretary of State's website. So that's worth a lot for peace of mind. And then, okay, then when it comes down to like, okay, well, which entity should I be? Generally for farmers, an LLC is going to be the right fit. And the big difference between an LLC and a C Corp is an LLC is what's called pass-through. So any income you have from your farm kind of gets passed through to you and gets kind of like added into your personal income for tax purposes. So that basically means you only have to pay taxes once, like just as the individual. As a C Corp, you basically pay taxes twice because your corporation has to pay taxes, and then any like salary you pay yourself or dividends you pay yourself as the farm owner, those also get taxed. So generally an LLC is better. There are some exceptions if your farm is really big, or if you're providing housing for, people who are owners of the C Corp, then a C Corp can make sense. But for, 95% of farmers, an LLC is the way to go. Any questions on that before I hand it over to Sam to jump into taxes? All right, let's get into the good stuff, Sam.
All right, Alex, thank you. Let me see here. So basically, we've got federal income taxes, an overview of what you're going to be seeing on these forms. All the way to the left on the first row, we have the Form 1040. This is just your personal taxes. Your first page is going to have your W-2 wages and the flow through from everything else. It's going to be running into that page there. The second one, the Schedule F, that's where most of your farming activity is going to be. We typically are going to use this to broadcast our income onto our tax return, our assets, things of that nature. Let's see. Next along, Form 4562. Again, this is the money form. This is where we keep all our assets. This is going to keep track of our depreciation, and a lot of value is to be had here. And lastly, Schedule C, profit and loss from business. This is going to be a little bit more away from the ag space, but it's still going to host a lot of laborious activities. But if you're doing produce, cattle, anything with hay, things of that nature, the Schedule F is what we're going to be focused on. Here, and let me see. Schedule F income, line 2 right there. Sale of livestock, produce, grains, and other products you raised. That's typically going to be your ordinary income. So the items raised, such as calves, things like that, is tracked as ordinary income. Again, that's a little bit separate from the capital things like we're going to talk about in a minute. Let's see, line 3A, cooperative distributions from 1099 PATRs. You will get these in the mail. Keep an eye out for these forms. They're going to be typically from your capital farm credits, your co-ops, your just things of that nature. They're going to be distributions and that you'll get during the year. Let's see here. I believe I've got agricultural program payments. Those again, your USDA payments, things of that nature. Crop proceeds and federal disaster kind of goes along the same lines, just some subsidy that really helps us out. And then that's all going to flow down to Schedule F. The car and truck expenses on line 10. Again, anything for your ranch trucks, ranch cars, maybe if you have some to run to town with just to get some parts or something, that's going to flow to that. And again, it's moves into just our auto expenses, mileage, things of that nature. Just make sure if you do use the mileage method, whichever is greater. So the mileage method for this year, for 22, is 58 cents in the first half of the year and 62 cents in the latter part of the year. So again, you're going to add up your mileage, take half, and then use those accordingly. But
Sam,
whichever.
Could you give a little bit more explanation into the two ways to track car and truck expenses for the folks who weren't on the financial management webinar last week?
Yes, ma'am. So basically, when in these two ways, I would, for the first way, for the mileage way, I would keep a mileage log. So basically, whenever you stop and fill up for gas, take a read on your odometer. Now, that's the most accurate way to take it. If you keep track of it by the year, which is also fine, write it down or even snap a picture, because if you're ever called on the carpet from the IRS, they're going to want to see some proof for these expenses. And that's going to be super helpful to have too, just for your personal records to track the mileage for the farm. Alex, does that kind of cover some more areas?
Yeah, and then I think what we talked about last week was the alternative to tracking mileage is actually just to track all your car and vehicle expenses. So tracking every tank of gas you buy, every time you get the car repaired, the depreciation value of your car and truck. So that is an alternative. And sometimes that's you can get a higher deduction from doing it that way, but generally tracking mileage is a lot easier. So especially if you're having trouble keeping your expenses straight, I would recommend just tracking mileage. And then what that means is you cannot deduct things like gas for your truck, because then you kind of be double counting. But it's more you pick one way you're going to track it, and you just track and do it that way.
And how does that change, Sam, if the vehicle is owned by the farm entity rather than an individual?
Well, it's ideal to have it owned by the farm entity. So basically, it's going to go off percentage of use. So say if I run to town once a week or twice a week, we're going to get into splitting hairs basically on the percentage that we're using this vehicle.
Okay.
And I think that was Eva had a question in the chat. So if the car is not farm property, can she still use mileage? So I think a lot of people are going to be in a situation where they use a car, half for the farm and half for personal purposes. So what should people do in that situation?
Yes, just be careful. Make sure you're keeping your mileage and use a percentage. The percentage you use it for the farm, it can be a rough number, 20, 15%. Maybe if it's higher than that, just use that percentage of the mileage, but just be careful and have records always on hand.
And then we got a follow-up question. What if it's not my car? It's just borrowed.
Well, that gets into the thing of a rental agreement, or are you talking about just if I hopped in somebody's car and used it to run to the farm?
That might be one. And then also let's talk about if you have a rental vehicle, where would that go?
Well, basically, I would put it on rents on that Schedule F, but I would elaborate. I would just say, vehicle rent or equipment rent. Generally, you're supposed to have an agreement in place of some sort. So whether it's written legally, preferably, that agreement is supposed to be in place if you use those expenses. So if I go to Sunbelt and rent a tractor or like a forklift, obviously they're going to make you sign some papers.
Yeah. Okay. That makes sense.
All right. You ready to kind of move on here? Let's see. Conservation, depreciation, we covered that.
Yeah. And if y'all are, looking at this list of, things here like, whoa, how am I going to keep all those expenses straight? If you weren't at the webinar last week, we talked a little bit about how to organize your expenses over the years, and the template we sent out after that one, gives you a methodology for categorizing into all these Schedule F categories. So if you don't have that template, feel free to reach out to me after this webinar. And I'm happy to send that to you. So that way, hopefully at tax time, it'll be easier because you can just see, okay, I spent, X amount in feed this year, and you can just drop that in.
Hey, Alex, do you mind if I also elaborate too on depreciation?
Yeah, should we, yeah, we'll go ahead and let me click to that slide.
All right, so basically, we've got the depreciation, kind of our sectors of it. So, capital improvements to the land, on the fences, let's see here, water wells. We're gonna take just anything to improve infrastructure, cattle pens, whether portable or in place. That's all gonna be something that you're gonna want to keep your seat on. And at the end of the year, whether that's the total price, have it when you bought it, and keep that for taxes, because that's going to give you a good amount of benefit. Capital is going to be treated differently from most farm expenses, which, you're going to have the option to depreciate that out. You can take bonus depreciation on these items if you're in need of some extra help at the end of the year. You're going to see 5 to 7 year lives on pretty much any equipment. The barns and things of that nature will run out further. Again, consult the IRS.gov, some of their resources on those guidelines. Let me see. So,
Yeah. And we had a little quiz on which items count as capital or not. So feel free to put your answers in the chat here or just jump in via voice. So the first one is a barn. If you buy a new barn or build a new barn for your farm.
We have a question in the chat. What is bounce items by Charlie Robinson?
Balance items.
I'm sorry, I meant bonus.
Bonus items. Yes, ma'am, Ms. Robinson. So bonus basically means that you're going to want to take a larger lump sum of that depreciation up front. So is what that's going to do is that's going to give us another non-cash expense, which is basically going to boost our expenses. And so it can offset your income a little bit more depending on the amount of bonus that you take, which.
Yeah, we'll get into how depreciation works in a minute here. And if we didn't answer your question enough there, we can answer it again, because it does get complicated, unfortunately. Okay, so y'all all got it right, that barn indeed is capital. So then to mix it up a little bit, what if you build a new hayloft for your barn? What do you guys think? Is that capital or not? Again, there are no dumb answers or questions here. Some of these things are hard. Okay, got a capital question mark. Yes. All right, good job, guys. You're nailing this. Yep, Leslie's nailed it. That's an improvement. That does count. All right, what about a tractor? You buy a new tractor. Does that count as capital? Yes. All right, you guys are crushing it so far. 3 for 3. That is indeed capital. All right, what if you have to repair your tractor? Does that count as capital? Or is that a regular expense? Nope. No. Think not. You guys are correct. So repair, so something to get your capital back into its original condition, but not make an improvement. That is not capital, just a regular expense. All right, what about if you buy fencing? Yes. No. Could be capital. Oh, you guys are still nailing it. This one depends. Sam, did you want to give your kind of rule of thumb for threshold on fencing?
Yes, ma'am. So basically, if you're going to spend more than say $1,200 to $1,500 on fencing, I would go ahead and put that on the asset schedule. If it's below, the reason for that is you're just going to use that as supplies. You'll have a asset schedule that ends up being a good textbook long if you track every single one of those repairs, basically, or supplies.
All right, next one, vegetable seeds. Capital or not capital? No, no, no. You guys are right. That is not capital. How about apple tree seedlings? Oh, we got some division here. Anyone else want to take a guess? Oh, yeah. So this one is capital. Fruit and nut trees do count as capital because the trees last a long time. So, but that one's a tricky one. I saw someone was paying attention to Sam earlier. All right, how about stockers? So cows that you're raising for meat. Capital or not capital? Got a couple no's. What do the rest of y'all think?
About cattle.
Yeah, we tried to mix up the types of farming here. All right, so animals you're raising for meat do not count as capital. But what if you have cows that you keep for calving? It's like breeding livestock. Yes, 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 yes. Yep, you guys got it. Awesome. All right, and then Sam, I think you kind of started to voice this over.
Yes, ma'am. I hinted at it earlier. See, on this length of life, 5 years again. Car and trucks. You buy a brand new Chevrolet truck at the dealership. You're going to want to use this one. New farm machinery and equipment. Your hay cutters, things like that tend to deteriorate pretty quickly. Breeding livestock, 5 to 7 years, depending on, their cycles and depending on what it is. Your mileage may vary, whether you're doing horses, things like that, but you got to be careful with horses. As you know, there's some additional rules around all that. Going to 7 years, office furniture and equipment. So your fixtures and furnishings, used farm machinery and equipment, fencing, gates, 10 years, single purpose agriculture buildings. If you're using that house only for growing, that qualifies as tenure. Fruit and nut trees, just like your apple tree seedling there. And then the 20 years, farm buildings, whether it be your shops, your, things of that nature that have multiple uses. Stuff that you can pretty much do a couple of things in. All right.
And
What's the logic between having new farm equipment depreciate quicker than used farm equipment?
The logic behind that is, Kirsten, that basically when it's newer, it's still wearing in. So a lot of times that 7-year stuff is going to be used and it's already going to be rolling. During those first 5 years, it experiences a lot of changes and with tolerances, bearings and things like that. It's going downhill fast.
Oh, okay.
so one thing to call out here is this IRS length of life may not match how long you actually use the thing. So for your taxes, I would use these numbers because it's IRS guidance. But when if you're pulling together like a balance sheet for your farm to go to a bank and say, here are all the assets I have, and you might have a, tractor that you did purchase new 7 years ago. So the IRS says it's, past its life, but like, hey, on the secondhand market, if I needed to, I could still sell this thing for $5,000. You might, use a different number for how long the thing is going to be on your balance sheet, just depending on what the market value of that item is.
Definitely, Alex. This isn't a vacuum. There are plenty of farmers out there with vintage equipment. All this new stuff with diesel exhaust fluid, it's very expensive. So keep that in mind as well.
Yeah. So we're gonna go through kind of a simple example of depreciating a used tractor that you bought for $15,000. And we built this, simple little calculator that we will share with you after the webinar is over.
Yes, Alex. That used Kubota tractor in this example, you're going to want to take for straight line, depending on your convention and all that, but this is just a simple example. Used Kubota tractor basis in this initial cost, 15,000. Years put into service, basically through 22 through 24.
Yeah, this
14.
basically, obviously it's the same tractor, but we're showing what happens depending on like putting it into service this year, or sorry, last year, this tax year, versus sometime in the past versus 2014, which would be per the IRS, like it's not worth anything anymore. Though getting back to our earlier point, it may still be useful.
So going forward with that. And so, the recovery period you have there in the middle, life of years, the convention, high yield, which is the default, simple stuff, straight line, simplest method of depreciation, and then your deduction all the way on the right-hand side. So that's the amount that we're going to be using as a non-cash expense each year on that tax return Schedule F.
And what I'll highlight on the convention and the method here is there's lots of different ways to do this. This is just like, hey, if you're really just trying to do this yourself, I think we have a couple of people waiting in the waiting room. Y'all mind letting them in? If you're really just trying to do it yourself, I would use the half-year convention and the straight line method, which basically means, so half year basically means if you bought so let's take our tractor that we put into service into 2022. So it's tax year 2022. I bought this thing last year. Basically, this says, hey, IRS, just assume I bought it smack in the middle of the year. I was using it, July through December. And then the IRS is going to say, cool, you're going to take your $15,000 and you're going to divide it by 7 because that's how long the tractor lives. And then you're also going to divide it by 2 because there's only the half year. And when I say $15,000 divided by 7, that is this straight line method, which basically means I'm just taking the same amount of depreciation every year. And then so if it's a tractor you bought before the last tax year, then you had it in service already, so you do take it for the whole year. So you just do the 15,000 divided by 7, and you would do that and that's how you get the $2,000. You would do that for 2021, 2020, 2019, et cetera, et cetera, et cetera. And then 2015 is the other half of that first year. So you would take that, half deduction again. And then 2014, well, you've already hit your 7 years, so you can't depreciate it anymore. So that's why that's down to 0. And like I said, there are lots of this is like the simplest case. There's lots of other ways to do this. Sam, I don't know if you want to go over, like when to ask for help, or some situations where you might be able to get a bigger deduction using a different method.
Yes, ma'am. So it's basically going to be like on your advanced depreciation or your accelerated methods, 200% double declining balance, things of that nature. Think luxury vehicles on this one, things like that, where your depreciation is very, very high at the beginning, and then it kind of peters off towards the end there, when it's not worth very much anymore.
Yeah, so when it might be a good time to call Sam, another CPA, if you are making a big capital investment and you want a little bit more depreciation at the beginning to help you cover that cash cost. Or if you have situations where, you're just starting up and you bought a lot of capital this year, especially towards the end of the year, because that means, different things. And like Sam said, if you want to accelerate your depreciation schedule. But this is the easiest version. Any questions on that? And then here's the actual tax form.
Yeah, that's what it looks like on that form there, that 4562.
Yeah, so this would be like a farmer who has the $15,000 tractor and then maybe like a $10,000 greenhouse. So one of those single-use horticulture buildings. All right. So again, so any other questions on depreciation before we move on? I know like capital and depreciation's really kind of a convoluted thing. Feel free to drop questions in the chat too if you have any like specific questions about your farm. All right, I guess we just made that as clear as possible.
I like some of those federal employment taxes. Alrighty here. We do not have to pay those federal employment taxes on contracted labor, but do need to file that 1099 every year before that 1099 deadline. I would advise to do it before January 31st. If you can, start getting ready for those 1099s to go out, issue your W-9s, get your farm hands information out of them, and just make sure that you have those in. Let's see, you have to pay 13.5% in payroll taxes, Social Security, Medicare withholding for any employees, including yourself. Those are those W-2 employees that you're going to have. Most of y'all may or may not have W-2 employees, but just make sure that you are getting the withholding right and remitting that sort of thing back to the EFTPS or payment methods that y'all are able to access there. Let's see, for any employees, including payroll software, QuickBooks, Gusto, that's great. If y'all can get something like that you can get your hands on, that will help you calculate all that and will help you remit those payroll taxes. Awesome. Need to file quarterly for all W-2 employees. Again, that's your either 940 or 941 series. One's going to be quarterly, one's going to be yearly, if I'm not mistaken. Let's see here. And then 2.7% Georgia unemployment. That's, like I say, for the first 9,500 in wages. Good rule of thumb. And then again, the W-4 and the W-9. Good place to start.
Yeah. And Sam, I know you also wanted to share some thoughts on estimated payments because those payroll taxes are due quarterly. So if any of y'all have employees and you're not using a payroll software that's doing this for you, it's not just April 15th that matters, like it is these quarterly payments. And then I think that applies for LLCs too, right?
Yes, Alex. So always good idea to make those quarterly payments. If you owe $1,000 at the end of the year when you go to file your taxes and you didn't, you will be penalized on that. Good general rule of thumb to make them. Now, there is a 2/3 rule principle. If you get all of your income or 2/3 of your income at least from farming, you only have to make one of those payments.
And is that 2/3 of your income for a whole household, or is it just for an individual?
I would say from the household itself. That's 2/3 of your producing income from farming activities.
So like if your spouse has a W-2 job and you have the farm, you're probably going to have to make those estimated payments throughout the year.
Correct. Just apply the 2/3 rule.
Cool. All right. So we're going to jump into another quiz here of what are things that you can deduct as farm expenses? So first one is supplies you've bought but haven't used yet. What do y'all think? Is that deductible or not? Okay, so I've got a couple votes for yes, yes. All right. Any other guesses? Yes. All right. Yes, you guys are all correct. That is definitely deductible. Farm mortgage interest. What do you guys think? So if you own your property and you have a mortgage for your farmland. Yes, yes. What are some other guesses? Yes. Leslie, this is a good question. Is this the same as a house mortgage? So the answer is yes, but there's an asterisk because I'm sure a lot of y'all live on the farm. And so your farm mortgage may be the same as your home mortgage. And Sam, you want to talk about how to handle that case?
Sure, Alex. That's going to be by percentage as well. So same way you're doing your car or truck, if somebody just hopped in it to go run an errand for the farm, use the percentage allocation that you use the house or the office in your farm.
Yes, that's how you'd handle that one, but it is deductible. All right, what about so let's say you don't live on the farm, but you do have a home mortgage, but you do, some farm work from home. Either you have a home office or you're making value-added products in the kitchen, or you're using your garage to store inventory. Okay, we've got an answer for percentage. Yes, some.
We are gonna claim. Sorry.
Yes, yes by percentage. Yeah, you guys nailed it. It's generally not deductible, but if you are using that space exclusively for farm stuff, you can deduct a percentage. So if you're doing farm office work at your dining room table and your family eats there sometimes, that does not count. But if you have a dedicated room that's only for farm business, that would count. And same thing for your garage or any other storage space you have in the house. If it's just being used to store inventory, that does count. But if it's a mixed use room and you're using it for personal purposes too, that does not.
And I can jump in on that and say, if you have a space in your house that's dedicated to starting seedlings, that's one that I've used and deducted in the past. That was what my dining room table was for years. And so I deducted the square footage of my dining room table.
All right. What about if you're providing housing on the farm for permanent workers? So these are, we also, while you guys are putting your answers, we got another question. Is there a sheet of percentages to use for tax? Kendall, do you mean it like a sheet of percentages of your home that you would use? Or is it, it's something else?
Yeah, so it's not a specific sheet, like you can look it up and say, it's more the area that's, if I remember correctly, and Sam, correct me if I'm wrong, it's you take the square footage that is dedicated to that farm space and you use that to create a percentage of the mortgage or rent or whatever expense you're deducting to put in your taxes.
Well, basically, yes, ma'am, Ms. Kirsten, but you must be careful. If you're going to do what's called the simplified office and home deduction, this is only for your office spaces, okay? That's going to be $5 a square foot, and it's going to have a max of 300 square feet. That office must be a dedicated area, so it can't have two functions. But it's, again, the IRS, their ideas are not always ideal. But in the case of an audit, I would highly recommend that it be a separate space. Now, the other area of percentages, not to be confused, this is going to be basically the long way. This is the unsimplified way. So if I have my office utilities that I used for the farm, or office electricity, some of the garbage, maybe have a cleaning lady come in twice a week. We're actually going to take the percentages of those utilities and use them for your office expenses. So if it's 5%, be real with it. It has to actually make sense. Take that total amount, basically, of those utilities, where you can split it out and use that percentage method. It depends which one yields more, as to which one I'm going to take.
Yeah, we do not have a list of percentages because it just depends on how much of your home you're using. But this might be another area where if you're using a chunk of your home, it may be a good idea to pull in a CPA on this one, just to make sure that you're not going to get dinged by the IRS. All right, so getting back to our little quiz here, housing for permanent workers, there were a lot of yes guesses, but this one's actually not deductible. It's just what the IRS says on this one. But then we have housing for temporary workers. And so what do you guys think about this one? So this is like if you're bringing folks just in seasonally, giving them a place to live on the farm. One guess for yes. I hope it. Why would that be different? Sam, I don't know if you know the reason behind this, other than just like the IRS says so.
A lot of that's going to be because the IRS says so. Yes, Alex. That's the proverbial ranch house. Think about people coming in and out. Your paper towels, your toiletries, your things of that nature. You buy snacks for the folks at the barn, kind of thing. And they just so happen to be living there for a little bit.
Yeah, if I had to guess, the logic would be if you're providing housing for permanent workers, you're probably charging rent, and so that would be different source of income. Whereas housing for temporary workers, you're generally not charging rent. That would be my guess, but who knows?
And W-2 as well. If Alex, if you have a permanent worker at that location, that may be a factor in their wages because they're on a full-time basis. That's just another theory that can go along with that.
Yeah. Go to the next one. Continuing education. So, if you go to a conference or, this webinar is free, but if you were, paying to attend a webinar, what do you guys think? Is that deductible or not? Got one vote for yes. A couple of votes for yes. All right. Yep, you guys are right. That would be deductible, assuming, of course, that continuing education is for your farm business. What about membership fees? It's like co-op fees. If you're joining Georgia Organics, the Farm Bureau. Yes, 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 yes. Yeah, nailed it. The only asterisk there is it's got to be, again, farm related. So, if this is a membership fee for like the succulent of the month club, that one might be questionable. All right, what about fines, fees, and penalties? No. Any other guesses? I see we get fewer guesses on the harder ones. All right, no. What kind of fee? All right, yeah. So I've got it sometimes. If it's something like the farm bank has an account overdraft, that fee is probably deductible. But if like you get a speeding ticket on the way to the farmer's market, that's probably not deductible. And again, with fines and fees, I'm just going to refer back to the financial webinar, which is why we kind of did them in this order. You know, the best thing on these is just to avoid them in the first place, because even if you can deduct the expense, that's reducing your tax burden, but you still had to pay the fine, which is not ideal. All right, utilities. So Sam talked about this one already, so I'm sure you guys are gonna nail this one. So this is like your power bill, gas bill, internet bill. Yes, yes, percentage, yes. Yes, yep. So deductible, but again, if you are, if your home and your farm are on the same account, you will have to kind of take an estimate of what percentage of that is personal and exclude that. All right, and then one we get a lot, boots. If you buy farm boots, is that deductible? What do you guys think? Yes. Can it be used for something else? Good question. Any other guesses on boots? Yes, depends. Personal income tax question mark. Yeah, so this is a sometimes. And Sam, I know you had some guidance on this one.
Yes, Alex. So again, on the boots, on the uniforms, on the FRs, things like that, you know, as long as you can't wear it anywhere else, basically, or if you only take your pair of boots or your uniform, as we'll call it, and keep it in your truck, you know, those are the mud boots that you see on everybody's back windshield down here. You know, you're only using that for a farm. No way you're walking into the dance on Sunday night in those, but that's generally the rule.
All right, and then last one on travel meals. So if you're making a long trip to a processor, or you're going out of town to a conference, gotta vote for yes. I would include in the gas category. Yes, certain percentage. Yes. Yeah. And Sam, you want to talk about how, especially how this one's changing this year?
Sure. This year, 22, 100% deductible. You know, as long as it's a qualifying meal for the IRS purposes, you know, sold, you know, obviously you can't go to the grocery store and buy your sandwich makings and call that a meal. That's more in the supplies category, things like that, miscellaneous. You know, it is going to change in years to come, back to 50% where it used to be, which, you know, take your total number of meals and cut it right in half next year.
All right, well, you guys did pretty well on that one. All right, so now we're going to get into some of the more specific Georgia stuff. So first off, Georgia does have an income tax. Unfortunately, we can't all live in Texas like Sam, where they don't have that. But at least the state income tax is pretty straightforward, because you will have already prepared your federal income tax returns. And so you just take that and pay a little bit more for your Georgia individual income tax or corporation tax if you're a corporation. So that one is at least simple. And then we have our next poll question. Yesenia, do you mind pulling that up? And the question here is, do you have a gate card? All right, and we got a yes vote in the chat for folks. Feel free to enter in the chat if you're having trouble with the poll. All right, so we've got a good split here, it looks like. Give folks a few more seconds to answer. All right, so we have a 50-50 split between yes and no, I've never heard of it. So I guess it's good that anyone who's heard of it has gotten it. Kirsten, you want to talk about why?
This is the best $50 you will spend for your farm. Georgia lets you exempt from sales tax on any sort of agricultural equipment, seeds, production inputs, greenhouse supplies. And it's basically like a 3-year card. You reapply every 3 years, it's $50. And it will, so companies are not required to accept it, but the vast majority of them do. And it's not just companies that are based in Georgia. Think like Johnny's Seeds, Home Depot. I've used it at Greenhouse Megastore. I used it when I bought my tractor from Kubota. This will save you way more than the $50 you'll spend on it over the course of a year. Different companies have different programs to keep track. So, for Home Depot, for example, you have to go in once a year and show them your gate card and fill out a form, and you'll end up at the pro desk and they won't know what they're doing because they've very rarely seen it before. And so you'll spend a couple hours like waiting for them to figure it out. The only company I have run into that does not accept this is Lowe's. I've used this for any sort of ag purchase, and there are certain exemptions. It won't cover vehicles, for example. Not that I didn't try, but this is, if you have any large purchase, it's a slam dunk. That I agree with that. Everyone should be shopping at Home Depot anyway. I do like Lowe's political setup more, but they make it a pain to use a tax exemption. And over the years, I have seen it get less and less easy. It used to be just a straight, you have a year, then it was you have a quarter, you have 90 days, then it was you have a month, then it was you have 14 days. And the last time I tried to use it, they just straight up refused, which was really annoying because it was at the height of that whole like COVID shortages and lumber being an issue. And I was trying to buy lumber and they had the sizes I needed. And I ended up paying like $80 in tax on a, several $1,000 lumber purchase. And I was annoyed about it. But
Yeah. So get your gate card if you haven't already. All right. So then the other half of sales tax is, hey, I sell stuff. Do I need to be collecting sales tax? So good news is most food is sales tax exempt in Georgia. So if you're selling, anything, produce, meat, fruit, whatever, that is generally food, they're sales tax exempt. However, prepared foods and other value-added products do require sales tax. So you do have to collect that if you sell any of those items. And then also DeKalb County, for some reason, just decides to be annoying and say that they do collect sales tax on food. I don't know why they do this, but they do. So if you are, operating at a farmer's market in DeKalb County, or you have a farm stand and your farm's based in DeKalb County, you do have to collect sales tax on food. And then in Georgia, depending on which county and city you're in, that's anywhere from, sales tax is anywhere from 7 to 9%. So just kind of keep that in mind when you set your prices and do your farm budgeting. Another thing is you have to file sales tax every month at the Georgia Tax Center, even if you don't owe anything. So, Good Agriculture, we are a services company. We don't sell products. We, help farmers with things, but we still have to file every month and say like, hey, we didn't sell anything this month, so we don't owe any sales tax. But we're just letting you know that we didn't sell anything. And we have actually been dinged for not filling this out. So if you have an active LLC or corporation, you should probably log into the tax center and just make sure you don't have to file this. And then the last thing to call out here is, so Georgia also has what's called a use tax. So this means if you buy something out of state or online and you don't pay sales tax, or like the company you're buying it from doesn't pay sales tax, you technically have to like go to Georgia and pay a 9% use tax on it. Now, I will say most people don't file this. Like I saw a study is like less than 2% of tax filers filed any use tax. but audits do happen. And so especially if you're buying something from a state that doesn't have any sales tax, which there's not any in the Southeast, so like if you go to like Montana or New Hampshire to buy something, which you're probably only doing to avoid the sales tax in the first place, let's be honest, you technically are supposed to pay use tax on that. Any questions on sales tax or use tax? Okay, hopefully most of you are just exempt and now know to avoid just DeKalb County. Just kidding, AgLanta. DeKalb is great. Except for this one thing. All right, we have our last poll of the night. Yesenia, do you mind pulling it up? And the question here is, do you have an agricultural property tax exemption on your farm? We've got a vote for no in the chat. Give folks a few more seconds here. All right, so one person does have an exemption, and then there's a couple folks who don't, but could, and then a few folks who don't own their land. So for folks who are renting, apologies, we're going to cover property taxes next. So, but this will be good for you guys to know in case you ever do buy land. So property taxes, if you own land, you get to pay property taxes. Each county levies these, so you'll get something in the mail from your county. So first off, they will send you what's called an assessment, which is like the estimate of how much your property is worth and about how much you're going to pay taxes on it. And then they will send the actual tax bills, usually in April. So there are several exemptions. And so if you guys don't have these things, you should absolutely do them, and you have to do it before April 1st. Otherwise, you will not get the exemption for the year and you'll have to wait till next year. So the first one, if you live on the farm, and again, this is only if you own your land, but if you own the property and you live on the farm, you can apply for a homestead exemption, which usually saves about $2,000 annually. And then there's a couple of different agricultural use things. So the first one is called the agricultural preferential assessment, where basically you just get 25% off on your property taxes. So the city or county might say, your land is worth $500,000, property tax is 1%, that's $5,000, and then you get 25% off. So then you only have to pay like $3,750 or whatever that is. So that's one way to do it. The other way to do it is instead of getting your land assessed, just at market rate, you can get it assessed as keeping the value of the land in its current use. So saying, I'm in Gwinnett County, all the land around me is getting developed like crazy, it's worth a lot, but I want to keep my land as a farm. And so obviously like the farm is not worth as much as like a big housing development. So you can get an exemption with the county to say like, hey, I want to be assessed as a farm and not as a potential future property development. And so generally, and you can only do one of these two things. You can have up to 2,000 acres on each. So if you have more than 2,000 acres, first off, you're in a great situation for Georgia, but then you could have like 2,000 acres in one and like the rest of your land in the other one. But generally, if you are in a rural area, the agricultural preferential assessment is going to save you more money because it's just a flat 25%. And then if you're in a suburban or urban area, the conservation use value will usually save you more because again, you're not getting assessed like you're a future housing development. And then if you have forest, like lots and lots of forest, there's also a super CUV or conservation use value. It just removes the 2,000 acre cap. Again, I don't know that anyone in this call has that much land, but in case you do end up in that situation, just know that that's available too.
And I'll jump in and say the conservation use value, especially in urban areas, basically sets the value of your land to what the Georgia legislature considers to be the value of prime agricultural land, which last I checked was pre-pandemic, but it was like $1,500 an acre. So I don't know if you guys have looked at what this county thinks your land is worth recently, but I have yet to see an acre inside of city limits anywhere that's $1,500.
Yeah, there's a table online. I think it's at the Georgia Tax Center that shows, like, based off which region you're in, what the like per acre value is. But to your point, like, especially if you have an urban farm, the CUV is going to save you a lot of money on property taxes. All right. So that was the last of our tax contents. So before we talk about additional tools and resources, any questions about anything we talked about? Cool. Well, we wanted to share some tools and resources. So we mentioned accounting software can often help around tax time, just helping you keep your expenses aligned. So, QuickBooks, Zero, Wave are all useful tools. Farm Bright also has an accounting thing that's, it doesn't connect to your bank, but it is farm specific, which is helpful. And then the template we shared, if you want to just track things in Excel, could be helpful as well. Then payroll software can help with your employment taxes. So QuickBooks, Gusto, OnPay, there's lots of solutions here. Square and other sales tracking softwares can help with the sales tax perspective. And then we will share the template for, the simple case of depreciation. And then there's, of course, tax preparation software. So TurboTax does have the self-employed version. That one is not free, but it's, cheaper than getting audited by the IRS, which does support Schedule F, which is that, farming profit and loss IRS form. And then Sam, do you want to, maybe share some situation in which people may want to reach out to an agriculture CPA other than just like, wow, I just don't want to do this. I'd rather just outsource it.
Yes, Alex. Well, some of the main reasons why you're going to want a CPA, especially an ag CPA, is we understand what y'all are going through. Y'all would rather be in the field than have to deal with some of this stuff. I mean, the hours that you entangle yourself in, can be pretty long, and it's long enough without doing taxes already. So again, reach out to somebody that understands you, which is an ag CPA naturally.
Awesome. And then, so this is the end of this webinar, but we want to share some other things we have coming up. So we have 5 more webinars in this series. So next week we'll cover marketing, then we'll do funding and financing for your farm, operational analysis, business cases, and then organic certification 101 with QCS. And for those folks in Metro Atlanta, we do have some more resources available to you. If you're in the 11 county ARC service area. So Sam is open to questions via email. We'll share his contact info on the next slide. And this is open for the next 2 weeks. So if you have a question for Sam on your taxes or anything else you want a CPA's thoughts on, you have until March 13th to email him, and he's happy to help. We also are having, if you attended the financial management webinar, we are having the follow-on workshop to create your financial statements, which will help for your taxes. We are having that on Sunday. And ahead of that workshop, we are having some one-on-ones to help you pull your financial data together. And then we'll have some one-on-ones afterwards for analysis and consulting on your finances. And if you're interested in those things, you can reach out to me. And then if you are outside of Metro Atlanta, we are happy to offer services. Unfortunately, it's not covered as part of this program, but we work with farmers all the time, so we have very reasonable rates. So definitely reach out if there's anything else we can help with. And this is how you can find us. And thank you, Tunisia, for posting the counties. Any final questions, concerns, comments before we wrap up? All right. Well, thank you guys so much for all the great engagement, all the thoughts and poll answers and all that. We really appreciated having you, and we hope this was helpful. Justin and Tunisia will be sending out a survey after this, so please fill that out. We would love your feedback.
Thank you so
Yes,
much. It was
and
very
before
valuable.
everyone leaves, just want to again reiterate that those services that Alex just mentioned, you do want to take full advantage of that within that period of time that they're being offered. This is something that is being supported by AgLanta Grown and East Point Grown, so don't let the opportunity pass you by. Again, just to reiterate, that is anyone who's in Cherokee County, Clayton County, Cobb, DeKalb, Douglas, Fayette, Forsyth, Fulton, Gwinnett, Henry, or Rockdale. If you have any further questions, even about that, in addition to talking to them, you can also reach out to either Justin and I via our respective contacts. But that is it for me. Justin, did you want to close out with anything?
Well, no, man, just wanted to say thank you to the team and everyone for participating. This has been a lot of thorough information. So we will be redistributing this video so that you can access it on your time. It'll also be within our link tree on our AgLanta Grown Instagram page. So you can always go back and access a recording, as well as we'll send a follow-up email. But we want to urge everyone to please fill out the survey that is automatically administered by Zoom once you log off of this webinar. And then it'll have a follow-up question on how you can continue to be engaged with us, and we'll be able to communicate with you further through there.
Yeah, in fact, I want to emphasize one question on that survey as well. Is it's going to ask you about some continuing education that's going to be offered actually starting this Sunday. So make sure if you're interested in getting more of these free tidbits of nuggets that we've just received, that you do complete the survey. I know oftentimes it's so cliche to be asked to fill those out, but there is some continuing education opportunities that are being sponsored by AgLanta and East Point Grown. So make sure you complete it. And we look forward to supporting you all through the next few weeks. All right, well, everyone have a wonderful evening.